Now, according to Johnson Matthey's interim platinum review, the deficit in the platinum market is forecast to increase to 605,000 ounces from 340,000 ounces in 2012. CNBC Africa's Samantha Loring asked Peter Duncan, General Manager of Market Research at Johnson Matthey, what the key drivers for this deficit are.
The biggest single change, I suppose, has been the ABSA ETF, platinum ETFs, and the investment demand is at unprecedented levels. Outside of the ABSA fund, physical investment has been broadly neutral, but the ABSA fund has seen this enormous injection of platinum since it was launched in April this year, and it's accumulated something like 780,000 ounces of platinum in the first 7 months. And that's fundamentally the biggest difference between sort of this year and what happened last year, and that's what's moved it further into deficit. The supply side has really struggled to show any real growth, about less than 2% growth overall in supplies, and South Africa less than that. And the demand side, auto catalysts has had a relatively weak year compared to some pretty strong years in the past. Industrial demand, though, has been quite strong, and that's to a certain extent replaced the losses that we've seen on the auto catalyst side. But overall, without the ABSA ETF, the market would have been in deficit, but it wouldn't have been in an increased deficit.
Looking at the supply environment right now, because 5.7 million ounces is what we're looking at for 2012, let's look at South Africa, because it's quite interesting, of course, being the largest producer of platinum. We had mine closures taking out 115,000 ounces, and expansion adding more than that, 145,000 ounces. So you would have thought potentially in this environment where we've seen lower prices, you would have had more mine closures, but that hasn't been the case. Why is that?
Well, it hasn't been the case yet. I mean, the impact, of course, of the closures that have recently been announced hasn't really hit yet, and it'll hit us in supply next year. So Amplats has announced that they're taking about 250,000 ounces out of annual production. But because they've only just closed down the shafts that are going to make that change, we haven't yet seen it in the numbers this year. So it's a little bit of a confusing picture in that respect, but we certainly expect that impact to kick in next year.
Going forward then, I mean, once we have Amplats taking that 250,000 ounces out the market, which is of course quite significant, what do you see the supply environment to look like, say, 5 years down the line? Do you see more marginal mine closures? Do you see it having stabilized at around these prices?
If these prices stay where they are, then I would certainly expect to see far bigger rationalisation of the industry, because costs are rising far faster than CPI in South Africa. And even at the moment, with a very weak rand, something like 30% of South African production is not generating cash after capex. So if prices stay where they are, you would have to see quite a lot further rationalisation. If that weren't the case, then I would probably expect some further rationalisation anyway. Perhaps a sort of consolidation of the smaller mines into the larger companies in a 5-year time frame.
We talked about the ABSA Capital ETF, which is now around 780,000 ounces, and of course the world's largest platinum ETF. Right. I mean, are institutional shareholders looking into the future and seeing a bright future for platinum? That's why there's so much demand there. I mean, what do you see when you and what do you take out of the fact that there has been such a surge in investment demand?
I think the institutional investors in South Africa are pretty canny about the market. They understand that the market is going to, for platinum, is quite strong going forward, that the demand is going to grow. So they recognise that it's a commodity worth investing in. I also think that money has switched out of equity investment, which is a little bit, whilst it might be more leveraged, if you like, it's certainly a tougher bet than the commodity at the moment, which is looking quite strong. So I think we've seen a shift from equity in favour of commodities, and an understanding that platinum is fundamentally an industrial metal, so demand is looking set to grow.
On the auto catalyst side, which of course is still the biggest component when it comes to overall demand. I mean, as the world's largest auto catalyst platinum producers, I mean, what are the dynamics playing into demand for auto catalysts? Because there are, of course, a lot of cynics out there, cynical armchair analysts who say there's going to be a new technology that comes through and wipes out demand for auto catalysts, or wipes out the demand for platinum used in auto catalysts. Is that going to be the case?
No, in a word. You can never say never, okay? I mean, engineers are always trying to find clever ways of doing things and improve things, and certainly you see thrifting in platinum loadings on auto catalysts as people get better at putting them down. better at spreading the surface area to get a bigger catalytic surface area. But fundamentally, you can't change the periodic table, and you can't find new elements, and you can't get away from the fact that the platinum group metals are incredibly good catalysts. So I don't think that anyone's going to be replacing PGM, in the near future, certainly not that we can see. As far as the demand growth is concerned, I mean, you've got an awful lot of things happening in 2014 which are going to be very positive for platinum demand. You've got Euro 6 legislation in the light-duty market coming in Europe, which is going to drive platinum demand in the diesel vehicles. Diesels in Europe is the biggest single diesel market in the world. More than half the world's light-duty diesel vehicles are manufactured in Europe. And so we're going to see the impact of Euro 6 coming in. Seeing the Euro 6 heavy-duty legislation is fully implemented from January 2014, so that's going to be another boost to platinum demand. We've got China 4 legislation coming in for diesel nationwide in 2014, so a lot of things are conspiring to actually grow the platinum demand after what has admittedly this year been a pretty weak year for demand overall, certainly in the diesel sector. And car registrations in Europe have been at their lowest this year for 20 years, but that's set to start recovery from